Global oil prices are fluctuating sharply. After a short rise, crude prices pulled back again. The ruble is also extending losses, giving up its early gains. Oil market remains highly volatile as traders are strongly reacting to the current situation. Today, the OPEC Plus deal on output cuts came into force. As a result, Brent crude surged above $27 per barrel, first time since April 20. Likewise, the deal has boosted optimism of the WTI buyers. However, both grades failed to hold in the positive territory. It seems that growing concerns over the shortage of storage capacity continue to weigh on oil prices and cause high volatility in the market. Brent oil futures for July delivery dropped by more than 1%. Brent is now targeting at $25 per barrel. WTI oil futures for June lost 0.11% in the early trade to settle at $18.60. In the course of the session, the US crude was rising above $20.45 per barrel. The huge imbalance between oil supply and demand is the main negative factor that puts pressure on crude prices today. Brent is expected to stabilize within the range of $20 to $25 per barrel only in the second half of May. Oil prices also react to the global news from the coronavirus front. Risk appetite is seen to increase as soon as the lockdown restrictions around the world are completely lifted. However, if the lifting of the quarantine measures causes a new spark of the disease, risk appetite will deteriorate sharply, which will affect the Russian currency. The ruble closed this trading week with a surprisingly good results. It managed to gain 5% in April, recouping half of its losses from March. Yet the US dollar advanced by 1.3% against the ruble yesterday. This can be explained by the long May weekend in Russia, as investors preferred to take profit before going on holidays. The ruble-dollar pair moved notably higher from the level of 74, where it closed the session on Thursday. In the midday, the greenback went above the marker of 75, gaining 1.7%, which was in line with the analyst expectations. In the coming weeks, market participants will be mostly focused on the COVID-19 crisis. Investors hope that the viral outbreak will soon pass its peak worldwide. The ruble is likely to stay moderately high unless new negative factors emerge in the oil market. The Russian currency may receive additional support from the bond market as a fresh inflow of foreign investments is expected here. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.